Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, October 4th. This is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I'm not a registered financial advisor. I cannot give you individual financial advice. Everything that you hear or see is for informational purposes only. Please do your own due diligence. It's your money, it's your responsibility. Okay, let's get into this week's slide deck. So, pretty good article about the AI bubble. I'll put a link to it in the show notes, but here's some snippets. I do think that this whole AI thing is a bubble. It doesn't necessarily mean that I don't think that AI won't have an impact or that I think that it's similar to the railroad booms and the internet boom and all these other booms we had where you get malinvestment. And we've seen that. We've shown examples of that. So it'll continue till it doesn't continue anymore, and then it'll be a problem. But I just think it's interesting, especially for folks that aren't students of history or haven't lived through things, especially if you're, in your 20s, you don't have a recollection of maybe even how the housing bubble went down. You were a kid. You certainly don't know anything about the last telecom internet bubble that we had. If you're 25, you were just a baby. So unless you've studied it, but you have to live these things. You have to be in the middle of it to really experience to see the parallels. And it's not necessarily, well, AI is different from this or the railroads are different from it's the mentality. It's the just how the mindset is around the bubble. But anyways, I thought this was pretty good. We've talked about what even like Zuckerberg said we showed on another video where he was talking about that Meta has to spend something upwards of like $600 billion in the next few years. And the other fact that many of these folks that are running these companies have said that they have to do it. It's do or die. It's a binary outcome. They either spend the money and hope it works out, or don't spend it and get left behind. And so they're going to also, that's why there's this like arms race going on. But I think it's a lot of it's malinvestment. But this is a pretty good article. I'll put a link to the show notes. Talks about why this is a bubble, what's really going on, the fact that nobody's making any money from this. And it's going to be kind of similar to what happened, I think, with all the fiber that was laid during the internet telecom bubble. There was all these companies putting in all this fiber infrastructure and all these servers, which was fine. And once these companies went into a tremendous amount of debt and did this, they went bankrupt, but the assets don't disappear. Somebody comes in, buys the thing at 5 or 10 cents on the dollar, and then it slowly got utilized. And so I think something similar will, happen here. These things that are being built won't just go away. They're assets, but they are liable to change ownership if in fact this doesn't work out. So, anyways, um, here's a few snippets. I put on here the slide, how do you measure a bubble? Says Derek Thompson, with the help of Paul Kudrowski, notes, quote, total AI capital expenditures in the U.S. are projected to exceed $500 billion in 26 and 27, roughly the annual GDP of Singapore. But the Wall Street Journal has reported that American consumers spend only $12 billion a year on AI services. Wow. That's roughly the GDP of Somalia. If you can grok the economic difference between Singapore and Somalia, you get a sense of the economic chasm between vision and reality in AI land, unquote. So I thought that was a pretty good analogy or for what's going on. You're spending all this money and you're not getting a return on it. And maybe they will. But right now, they're spending 50 times more than than they're getting. That's just in revenue. Okay. That's just in revenue. That's not 12 billion in profits. So I put up here, is this the pets.com moment? So every financial bubble has moments where looking back, one thinks, how did any Senate person miss the signs? Today's omens abound. Thinking Machines, an AI startup helmed by former OpenAI executive Mira Murati, just raised the largest seed round in history, $2 billion in funding at a 10 billion valuation. This is really the punchline, this next snippet. The company has not released a product and has refused to tell investors what they're even trying to build. Quote, it was the most absurd pitch meeting, unquote, one investor who met with Murati said. She was like, so we're doing an AI company with the best AI people, but we can't answer any questions. Okay, well, let me write a check for $2 billion. I mean, this is exactly what goes on in a bubble. Okay. Well, they're so smart. They worked at OpenAI. We're just going to throw money at it. I mean, this is the kind of nonsense that goes on in a bubble. That's not investing. That's just, a manifestation of private equity and, these hedge funds and all this stuff. They just get money. It's not their money. It's not their personal money. And they have to invest it in something. People give them money because it's all hyped up. Do something with my money. You have a track record. Make something, make it rain. And so this is what happens. You get nonsense like this. This is kind of how like the internet bubble was with pets.com and drcoop.com. No revenues, no cash flow, no earnings, just eyeballs. Just, it's all a come bet. And so here's the spending that's going on by the hyperscalers. You see over here, Amazon, Meta, Google, Microsoft, Oracle. You see the spending. And again, I go back to what uh, Zuckerberg said. His view is that they have to spend the money or they risk falling behind and becoming irrelevant. I think what's going to happen is some of these folks are going to find out that there's a lot of malinvestment going on. So here's some more here about it's a different article. The AI bubble is 17 times the size of the dot-com frenzy. For good reason, it feels that the only major discussion in markets is whether AI is in a bubble or whether it's actually the early innings of a revolutionary phrase. It's that AI is not just in a bubble, but one 17 times the size of the dot-com bubble and even 4 times bigger than the 2008 global real estate bubble. LLMs, he argues, already are at their scaling levels as large language models. Quote, we don't know exactly when large language models might hit diminishing returns hard because we don't have a measure of the statistical complexity of language. To find out whether we have hit a wall, we have to watch the LLM developers. If they release a model that costs 10 times more, likely using 20 times more compute than the previous one, and it's not much better than what's out there, then we have hit a wall. And that's what has happened. Chat GPT-3 cost 50 million. Chat GPT-4 cost 500 million and Chat GPT-5 cost 5 billion. And it was delayed and when released wasn't noticeably better than the last version. It's also easy for competitors to catch up. So this is it. That's not cool if, you have to read the article. I'll put links in the show notes to understand how they're measuring how it's bigger than these other bubbles. Can you imagine, though, if this is accurate, that this AI deal is 17 times bigger than the dot-com bubble and what happens when this thing blows up, which it will eventually? Um, it's going to be a real mess. I mean, if it's 4 times bigger than the real estate bubble, that was the great financial crisis. And so there's a lot of risk here. And I don't want to that's the whole point of putting this on here. Now, I'm not putting this on here for thrills and to get eyeballs. I'm just putting out there reporting the news. Okay. And I've said this is a bubble ever since day one. Again, it has use. I use AI. I find it useful for certain things. They don't make money off my $20 a month though, for the amount of usage that I get out of it. So, I mean, how are they going to monetize it and recover their costs? That's the question. And the thing about it is, it's an arms race, right? Because every time new chips come out, new and better compute power, you have to upgrade it. Because if you don't, and your competitor does, you fall behind. So it's this never-ending Queen's race again, like shale oil, right? Drill, baby, drill, remember? And nobody ever made any money or even had positive cash flow. So these bubbles are kind of, if you really look at them in context, you can see. And it's just the whole the frothing at the mouth, the FOMO, the extrapolation of current trend years into the future. This is what you always see in these bubbles. And so I would stay clear of it, but you do you. So let's get to this other thing here. This is nuclear power generation reaches all-time high. Global nuclear power generation is on course to reach a historic high in 2025. Yes, of course. I wanted to point out a couple things on here. I wanted to point out China, which is this green area right here, this lighter green area, um, and India. And you see how China has really been expanding their nuclear fleet, and India really hasn't even started. And so this is tremendous. Then you have other Asia, which is, up here. So yeah, this is going to be tremendous, and this is going to continue to grow. And again, where's all the uranium coming from? Again, we keep asking this question. Here's some great news. Sweden draft budget commits 23 billion in loans for new nuclear. Sweden's 2026 draft plan for 23.4 billion in loans for the construction of 5 gigawatts of new nuclear capacity is one of the most generous nuclear support frameworks on the continent, but developers still have concerns. The government is also creating a new authority to streamline environmental assessments and proposing 17.2 million to make permitting more efficient. I mean, this was just a snippet from the article. This is, again, we saw one of the reactors in Belgium get extended again for 10 years. We're seeing more and more as people, I don't have to say it anymore. Nuclear is definitely a growth industry. Again, where's the uranium coming from? Speaking of that, uranium term price now is starting to advance again. It's up to in September. We don't get real-time information, although I think there is an entity that has created an app or a website where they are somehow able to aggregate and get more real-time information. I don't have access to it, but you can see what's happening. We kind of had a big jump in September. What I've kind of noticed is a lot of big money's coming into this now. You saw just like the recent placements that Yellow Cake did, and these things are getting upsized. People are trying to get money into this sector because I can see it. I'm sure, other people that are, running money. We need to reach that critical mass, right? Because this is such a small sector, it can't absorb billions and billions and billions of dollars. This is why I think the industry needs to consolidate and get like a few big players that can absorb the capital. But right now we just have, I think that's coming down the line, but right now we just have, it's kind of considered to be uranium mining more speculative, although there's a lot of things happening in enrichment and in other infrastructure around the nuclear industry. It's not just all uranium mining. So anyway, this is positive for us. So silver obviously is on the move. It had its largest quarterly close. That's for a quarter, not the all-time high, because measured in quarterly candles here by Tavi Costa. Again, you can do any kind of chart you want to get any kind of narrative. I'm bullish on silver and all precious metals, but again, nominally it's making new highs, but in real terms, it's tremendously underpriced because of inflation. $50 or $48 back in 1981 is totally different than $48 in 2025. Yes, when people throw out terms like silver could go to 100 or 200 or 300, I'm not opposed to that. You can make the case for that happening. Um, and so, you know, just based on the amount of money that's currency units have been created, and just because of all of the underpinnings that are positive for precious metals. Um, but yeah, this is getting more and more attention. Again, I don't really think we're going to have this super big. I mean, even though these things have been moving and kind of under the radar, mean, yes, on FinTwit and our little circle of discussions on these YouTube channels, yes, everybody gets it. But I think the big money has yet to come in because I don't think that's going to happen until we see the AI situation blow up. And then you're going to see this rotation of capital into other things. Where's the capital going to go? Money's going to come out of that sector when it's finally determined to be a bust, which I think is inevitable. And then the money's going to rotate into other things that are undervalued and or perceived to be moving. And I think that's going to be precious metals, emerging markets, all the things that we have been discussing. I think that that's what's going to happen. Plus, I think that if in fact this AI situation is in fact a bubble on the same level as the GFC or the internet bubble, then the response from the Federal Reserve and government, the inflationary response that will be required to mask the deflationary effects of a bust, I think will be a tremendous impetus for these metals. So I wanted to point this out. I was looking for this chart. U.S. Global Investors comes through. Um, this is positive, but also not necessarily positive, depending on what companies you own. So what do I mean? It says gold miners raised 6.7 billion in equity in the third quarter, the highest quarterly total on record. And so what does this mean? So let's talk about gold uh, mining companies. Okay. We obviously have the producers, which are, you know, enjoying tremendous cash flows, whether they're large producers, intermediate, or small. Um, we're seeing tremendous results there. Then you get down into the junior sector of the developers, project generators, this kind of thing. And so there's a lot of mining companies in Vancouver and Toronto. Okay. This is where a lot of them are focused. And if they're not actually mining anything and selling and getting revenue, then they have to tell a story. And that's what a lot of these companies are. They have a property somewhere. They're have gold. Gold's hot now. We have a gold mining company. We're going to develop this. We need cash, so we issue shares. So this is what you have to be cognizant of. Um, these companies, if they don't have the revenue, I can name several companies that are mining gold right now and still are not cash flow positive. And so they've issued shares recently. I'm not going to mention names if you follow the sector. And so that's not positive for you as a shareholder. If you can't make money mining gold at $3,800 an ounce, then you shouldn't be mining gold. And so you have to be understanding what you're dealing with here. This is not the time. I mean, with so many good companies out there that are cash flowing and doing well, this is what you inevitably see. Capital starts flowing in, private placements. Here's a share, here's a warrant. We're going to drill here. The results come in, the share price goes up. That's how the thinking goes with people. And so I don't necessarily take, uh, you know, you can see that this has done well, these issuances. Look at a company like Sprott Asset Management, right? Look at their share price. It's up tremendously because they facilitate a lot of these private placements and investments in these Canadian juniors. It's done tremendously well. That's the way to play these type things, okay? In the portfolio, I have a company that provides exploration services to a lot of these companies. So when they get cashed up like this, okay, then they can go out and start drilling and getting assessments of the properties. And that's what you're going to see as these prices get higher. Companies are going to say, okay, we're going to raise money. We can raise money now. The private placement window is open. There's a lot of interest. There's a lot of juices flowing, and people start writing checks, and this is what you see. And so that flows through into the kind of companies one of the companies I have in the portfolio that takes advantage of that. Okay, that provides those services. These companies don't do the drilling themselves. They get a contractor to do it, and then they have geologists on staff at the mining companies or consultancy that looks at the cores and says, "Yes, I'm a professional engineer. This is what it looks like." So, um, but you need to be prepared that if you own these companies, that's equity dilution. Not everything just goes up because we're in a bull market. So if you have a company that doesn't have any revenue and they start issuing shares, what are they doing with that capital? Are they able to take that capital, okay, put it into the ground, and then find sufficient resources and prove those resources up that exceed the value of the issuance of shares? Most companies can't do that. So you need to be aware of that. And so there's ways to play this without um, getting sucked into lifestyle CEOs and the nonsense that goes on these smaller companies, because most of them are run by charlatans that just want to get money. And this is why they have the saying in Toronto and Vancouver with respect to retail shareholders and people that like to be involved in junior mining. When the ducks quack, feed them. That's why you're seeing all these issuances now. So something to be aware of. It's both positive and potentially negative depending on what you own. So here's another tweet. I'm probably going to get in trouble again for this. This is probably well said. I put on here prelude to a gold mania. This is Christopher Aaron. Said gold's monthly RSI has only been this overbought twice before in its freely traded history. Okay, bear with me. In 1972 to 73, this is the first time that it was overbought. It led to a further 8 times advance over the following 8 years. So that's one outcome. Even though something's overbought, that's an example of just because something's overbought, it can become more overbought. The second scenario is in 1980 when gold peaked and then began a 2-decade bear market. It took gold 28 years to recover its 1980 peak. Now, if you had to get me to put probabilities on this, I would say it would be 75-25. We're nowhere near the peak because of the situation that our government's in with its debts, with the Western economies, with their debts, with all the things that we've talked about for years here of why I was bullish on gold. I have been, again, I was advocating people buy gold since I've had this channel for 7 years, physical gold. And I advocated people buy gold shares a couple years ago because as the gold price went up, that would be translated into cash flows. Okay. But you have to be understanding that when you get to these extremes of overbought, it's not a one-way street. The odds are fairly highly tilted that we go higher and higher because of all of the things that are behind this rise in precious metals. The monetary creation, the fiscal situation of the U.S., the long-term entitlement issues, the decline of the West relative to the rise of the global, all these things we've talked about. Global central bank buying as a result of the U.S. Atlantis hegemon trying to preserve the dollar, and confiscating Russia's assets. All of these things play a part in it, and so that's why the first scenario is probably the most likely. It's probably, if I had to put a number on it, 75 to 80% chance we move higher, but there is a chance we could go lower. Okay, what was the context of 1980? Well, that was an environment of inflation being out of control. That's why gold was rising, because the same situation was out of control spending by the government. Rates were high, inflation was high, nobody had an answer, and then Volcker came in and crushed it. I don't see that happening. As a matter of fact, we're in a situation where we have an administration that's in a Congress that's running wartime levels of deficit spending, 6-7% of deficit spending. I think the last quarter or last month's deficit was the third highest on record. So there is no Doge, there is no cutting spending. That's positive for gold. Okay. There's no fiscal prudence anywhere. And we're in a scenario where we're in a rate environment where they're going to be cutting rates. The US has entered a rate cutting cycle. Before I got on here today, I went and looked at, because we're in a new month now, and totaled up the amount of global central banks. I track this. And last month in September, we had 18 global central banks cut rates in the month of September and 0 raise rates. That's the first time that that's happened in many, many months. That's the highest amount of central banks cutting rates since September of 2023. And so the liquidity spigot is wide open worldwide. Of course, gold's going to go higher in that environment. Do I think it's a one-way trip? Not necessarily, but I think that we're in a bull market. So we get into a mania? Yeah, a mania precipitated by a crisis. What's the crisis? Couldn't tell you. When's the crisis going to happen? Couldn't tell you, but I think it's coming. So prepare accordingly. So let's talk about copper prices. Copper prices have surged over $5 a pound in the last week or so because we've had some major supply disruptions. Okay. And one of them is because of the big mine in Indonesia, the Freeport-McMoRan Grasberg mine. They had a big issue over there that disrupted production. So here's the article. It says copper prices climbed to their highest level in more than a year on Thursday, fueled by mounting global supply disruptions and growing expectations that U.S. interest rate cuts will support demand for the industrial metal. I just talked about that. It's not just the U.S. I showed, I think, in the couple weeks ago in the free weekly AIA letter, showing all the economies in the world that have positive above 50 PMIs and are expanding. This idea that we're going to have this global recession, I don't know where it's coming from. Okay. Um, yes, if the AI bubble blows up in the US, it'll probably be, an issue, but when's that going to happen? The article continues. The rally has been bolstered by news that Freeport-McMoRan declared force majeure at its giant Grasberg mine in Indonesia. The setback adds to a series of supply challenges across South America and Africa, tightening global availability. Benchmark estimates that supply losses will reach 591,000 tons between September 2025 and the end of 2026, equivalent to about 2.6% of 2024's global mine production, which analysts put at roughly 23 million tons. So you say, okay, well, who cares, right? 2.6% decline. Yeah, but commodities are priced at the margin. So if you even have a slight oversupply, the price can go down quite a bit. If you have a slight undersupply, price can go up tremendously. This is how commodity markets work. And so I was already very bullish on copper. They're right. We've had a new mine coming online, big mine in the DRC that had flooding that company's getting that under control. I'll talk about this in a minute, Codelco in Chile has had supply disruptions and declining production. And again, we're been talking about this for a while, just undersupply because of underinvestment. And it's getting harder and harder to find copper at decent, grades. Grade, head grade has been going down year after year because, of course, you develop the easy stuff first. And so then you have to get into these more complex mining scenarios, which raise the risk of disruption. And so I'm in the process of finishing the October issue of the AIA newsletter. I'll be adding a situation to the dividend portfolio and one uh, to the AIA capital appreciation portfolio that are both copper producers that I think have unique stories that will benefit, even if the price doesn't even go up, they'll both benefit tremendously. So if you're interested in that, you can take a subscription to the Actionable Intelligence Alert newsletter. Link in the show notes. So here's the Chilean copper output falls 9.9%. It's the largest drop in 2 years. Copper output in Chile, the world's largest producer of the metal, in August had its sharpest drop in over 2 years. Production slipped 9.9% year over year to 423 metric tons versus 470,000 tons. Output at the world's top copper producer, Codelco, took a hit after a July 31st accident at its flagship El Teniente mine that killed 6 people and forced a halt to mining and smelting. So mining's hard, and the supply situation in a lot of these materials, which are constantly growing in demand around the world because the global south and east growing, is precarious. And so the price is going to go up to, again, supply and demand works. So here's a chart of copper. You know, it was up to $5.75 a pound back in mid-July, and then Trump put the copper uh, tariffs on, it crashed it, and copper's been recovering ever since. So again, I've written articles about this in the newsletter. We have a tremendous endowment of mineral wealth in the United States and in North America, include Canada, and it needs to be exploited. And that's what the Trump administration, Department of Interior, Department of Energy secretaries are trying to do. Is it going to get fixed in a year? No. Then it's going to run into additional issues. Okay, so this is the problem that the U.S. has: is this 2 and 4 year election cycle doesn't allow itself to, you know, enough time to let these policies become come into fruition. Because as soon as you get like a Gavin Newsom in there, you can have a situation where all these executive orders, because they're not legislation, get reversed. So in my view, these things should be pushed through the House and Senate so they become federal law, and it makes it more difficult to just reverse it on the first day, because inevitably you will get another Democratic president. And then what? You just reverse everything? Then all the lawsuits happen? It's dumb. It's not how superpower react. A perfect example of California is a company that I do have. I'll talk about it publicly. I'm not going to get into too much. It's a company called Sable Offshore, just to show you how ignorant people are. California has gasoline prices that are like 30 or 40% higher than the rest of the country. And this is for several reasons. The dumb, stupid policies of California. California has one of the largest hydrocarbon endowments, I think as big or even bigger than Texas. They're just not allowed to produce it because of the nuttiness of the coastal elites and wealthy there that control politics in the state and the environmental activists. So you have a situation where refineries are shutting down in California, for example. I think there's a list out there, where I think 25% of the refining capacity is planning on shutting by the end of next year in California. You just had a big fire at the El Segundo refinery in Los Angeles. That knocked off even more refining capacity. Yet people still need gasoline and diesel. Okay, I know that you're not going to have the eighth largest economy in the world running off electricity for vehicular traffic. This is why they have some of the highest, they have very high gasoline taxes, fuel taxes, all these stupid policies. So you have a company, let me get to the punchline here, Stable Offshore, and they took over an offshore platform or platforms in federal waters off the coast of Santa Barbara. Okay. And they have a pipeline. It used to be an Exxon installation. Exxon used to own this deal. They wanted to get out of it, so they sold it to Sable. It was a SPAC, I believe. And they have a pipeline running from this field offshore in federal waters to onshore facilities. This has been there for many, many years. Exxon used it back in the day. They had a spill when I think Plains Pipeline was running it. They had a spill many years ago, and there was a big deal. And so, anyways, Sable takes this over. There were some existing back and forth with the state of California, the Coastal Commission, all of these, of course, California nuttiness. And so they have this pipeline. They refurbished it to the highest standards that are out there. Okay. It's been inspected by the fire marshal. The local fire marshal that did the initial assessment oversaw a lot of the repairs, oversaw the submission to the state fire marshal, which he needs to sign off. And there's still angst about it. Is Governor Newsom going to allow it to be signed off? And so it's funny because right now there's a lot of oil that comes to California because they don't allow their domestic state production because there's tremendous hydrocarbons. I just talked about that several weeks ago when they did change the law because Governor Newsom wants to run for president. And so last year, I think there was 48 oil well permits allowed in the state of California. Now they passed legislation to allow thousands of them because they know that he can't go into an election campaign in 2028 with these high gas prices and Vance will pick him apart, or whoever is going to be running against him from the Republicans. And so now he's Mr. Oil Man. And so getting back to Sable, platforms in federal waters, the pipelines in the state of California, and it's being held up with all these court cases and all this other nonsense. And then the interim, so you have this oil that's right offshore, and a lot of the oil from comes from the Middle East or Ecuador, which is rainforest oil. But this is how these people work, these NIMBY people. Julia Louis-Dreyfus is an Oprah. They're big, trying to stop this thing. And, and so what's going to end up, what they don't understand is, okay, the company came out last week and said, that's fine. I guess if you don't want to approve the pipeline, which has very high standards now, modern technology, chances of a spill, very, not zero, but not very high either. Or, or because we're in federal waters, Sable petitioned the federal government last week because the Trump administration's pro-oil and the Interior and Energy departments are pro-oil guys. Hey, can you permit us to put a floating production, uh, basically a ship that sits there, takes the oil from the platform, and then tankers pull up. So I would think it would be so delicious for this 50, 60, 70,000 barrels a day of oil for the next several decades, sitting offshore of Santa Barbara, this platform with the tankers pulling up every day, offloading oil. And so that's the dumbness that goes on and why we're falling behind all these other countries. It shouldn't, the realization is that you need oil and gas. So what's going to happen when all of these refiners shut down? Gas prices are going to, and diesel prices are going to go up even higher in California. You're not going to build another refinery there when they close these other refineries. And so they're going to have to bring in the refined products on, MRs and LRs from the Gulf Coast or from Asia. Does that make sense? Does that make sense to anyone? And it's just how these addled minds of Julia Louis-Dreyfus and these environmentalists, we'd rather have the oil come from Ecuador. We're down there hollering about the rainforest oil. They just don't want oil. They don't have this is why we don't let women and children make decisions, because you need a certain amount of oil in the state of California and refined products, whether you like it or not. That's reality. If you don't want to get it domestically, then you have to bring it in from overseas. But you're not going to have a modern economy running on solar and wind. It's not going to happen. But this is the dementia and wine and the Xanax and this the confused, clouded minds that exist in many of these people. And so we'll see what happens. Take a look at it. I think it used to be a binary outcome. I think many people had Sable as a binary outcome. If the pipeline gets jammed up, then they will never be able to produce the oil. But it's in federal waters, the platform. So federal government has jurisdiction. That's the state of California. Plus, Mr. Newsom has to, he's not really an environmentalist. He doesn't care. He cares about Governor Newsom becoming President Newsom. Doesn't care about environmental, whatever he needs to latch onto, like a virus or whatever kind of parasitical tick he is or whatever he has to say to get elected, that's what he'll do. So, he's trying to figure out, I'm sure him and his cronies, how can we, make this sign off on this and yet, but I think it would be delicious. It would take another year or so for it's able to get the tanker thing shuttling going on. And then that oil wouldn't, if produced in federal waters, the other punchline is it wouldn't even go to California. They wouldn't take it to Long Beach and offload it. It can't be sold in California. California would ban it. And so it would go to Washington State or Asia. That's how ridiculous this United States and places like California are. Okay. Let me not only shoot myself in the foot, let me cut off my other foot with a machete. It makes no sense. But take a look at it because share price has really been beaten down. And I think a resolution one way or another. And I really think that, somebody like Trump and the Trump administration would, they view Newsom as a potential rival for Vance or whoever in 2028. Why not take him down a step? They could really, really rub it in his face. Okay. And so I guarantee you that Newsom's sitting there with his advisors figuring out how they can get this pipeline signed off and not piss off Julia Louis-Dreyfus and Oprah. But, you know, whether or not they'll be able to do it, I don't know. Kind of a tangent, but I just thought it's humorous to me, interesting, but it's also an opportunity. Not without risk, and it is has risk, but I think it could be a big payoff. So somebody asked me in the Discord about Argentina and Malay. Look, we have the Don Road doctrine. You had the leak from the Defense Department several weeks ago talking about how the United States is focusing on the Western Hemisphere. This $20 billion bailout, or whatever you want to call it, to Argentina, that's what this is part of. The saber rattling around Venezuela, that's what this is part of, is the U.S. collapsing back onto its own hemisphere, is not able to, not going to be able, the realization, I think, is starting to set in with certain factions of the deep state and the establishment that you're not going to be able to contain China and Asia and the global South and East. And so what we can do is, saber rattle and try to control the Western Hemisphere. Uh, that's why I call it the Don Road Doctrine. And this, I think, is part of it. It's this bailout. You don't want to see, we had the recent local elections in Buenos Aires, and the Peronist left coalition did very well. There's a lot more things involved than just, Malay sucks. A lot of this, you can't really rely on Twitter. This is a foreign country, and you get a lot of biases. But, trying to keep the reforms going and getting this oil exported. This is the reason why, I was so talking about Argentina and how the Vaca Muerta field, and once they really start exporting, it could really change the whole dynamic of Argentina's finances, such that what happened in the UK under Thatcher. Now, it's not guaranteed, but that's what I think the thinking is going on here. Not just going to let this thing implode if they can help it, and then let the Peronists get back in and go back to what they were doing. And then, remember, Argentina was slated under the Peronists and the left to join BRICS. When Milei got in there, that didn't happen. That got canceled. So this is all part of the Don Road doctrine uh, and the geopolitical strategy that's going on. Most people don't look past, well, it's hurting, you know, not only that, Malay lifted taxes on soybean exports, and that's hurting U.S. farmers. Well, this is called geopolitical realpolitik. So that's what's going on here. Will it be successful? We have the elections in October. Will Malay's party do well? It doesn't look good right now, but who knows what's going to happen. And so we'll see. In the meantime, I think the US's view is keep this advancing, keep this oil projects advancing, try to keep you don't want Argentina, which is part of the Western Hemisphere, going back, getting a left-wing government in there and then swaying back to the BRIC. That's what I think is going on here. So anyways, says how Argentina became Latin America's fourth largest crude oil producer. I'm also playing this too because when YPF, which is a national oil company in Argentina under Cristina, I think it was 2011, Repsol, which is a Spanish national oil company, had a lot of their assets in the Vaca Muerta. I think they owned a big chunk of YPF at the time, got nationalized by Cristina and the Argentine government. And so there's been a lot of court battles going on, and I have a way of playing that also. It's not in the portfolio, but I may add it from a litigation company that finances litigation. I mean, the court cases have went against Argentina. They owe the plaintiffs like billions of dollars, and so that's kind of a long-term call option, if you will, or warrant on that. I think eventually that gets resolved, but that's, I think, is a lot of things going on here in the Argentinian oil sector that are drawing the attention of Washington, D.C. And of course, the people that are plaintiffs are a lot of big bondholders that are connected to politicians in D.C. So there's pressure, you know, you're not going to get paid back if you get the left wing back in power. So anyways, says this is from oilprice.com, how Argentina became Latin America's fourth largest crude oil producer. says Argentina has achieved a new production record of 816,000 barrels of crude oil per day in August 2025, largely due to the Vaca Muerta shale formation, securing its position as Latin America's fourth largest crude oil producer. The Vaca Muerta shale's well productivity surpasses major U.S. shale plays, attracting significant foreign investment and contributing to a substantial increase in Argentina's energy exports. Ongoing infrastructure projects, such as the Vaca Muerta South Pipeline, are set to further boost takeaway capacity and solidify Argentina's role as a South American energy powerhouse, positively impacting its economy. And so you have to look past the surface sometimes of what's really going on. And again, I've been talking about the Don Road Doctrine for a long time, since President Trump got into power again. His administration, I mean, you didn't think about this, other people there, but there are factions in every government, and some are still, wedded to the idea that they're going to break Russia up into these statelets and they're going to contain China. And there's other more realistic factions that are saying, look, we just don't have the capability militarily, financially, resources, what have you, to project power and control the rest of the world. I said this for many years. As these other economies became larger and larger and larger as a percentage of world GDP, they were going to blossom politically around the world and demand more say in what's going on, and not just take their orders from New York and London. And that's what's happening. And so I think there's people that realize that because of the fact that we're an aging population, that we have all this debt, that we have these internal contradictions and arguments going on, that we're not a united country, how can we possibly try to control the rest of the world? However, we may be able to control the Western Hemisphere. So I think this is part and parcel of it. So I wanted to show this oil decline rates. Take a look really over here at the right-hand side. This is by decade, the average annual loss in production and worldwide production. Again, since shale has come on the scene in 2010 and 2025 and become the major growth area for new supply, the annual loss in production has went up. Look, you see it right here. Here's your production, and then you see the decline rates. It's measured by if there was no investment from a given year. And so as we rely more and more on shale because it depletes more, this is what we have. You have to find the equivalent of an Iraq and bring it online every year, and nobody factors that in. We have not been doing that. So at some point, this is going to be a problem. Talked about it before, but I just thought this visual was really interesting. So this is interesting. I wanted to put this on here. It's Mark Mills from the Manhattan Institute. A lot of people, when you say Manhattan Institute, they don't like it because it's a right-wing think tank, they say. So why should I listen to it? But this is a pretty good article about the U.S. facing a skilled trades problem. This is another reason why this industrialization push is going to be very, very difficult. It would take a decade or more. And I don't see, I know Mike Rowe is doing a lot to try to get the skilled trades. He talks about it a lot. But this is going to be a stumbling block. We've already seen that in some of the mining situations we've talked about, where mining companies like Cameco and others have said, well, or even right here in South Texas with Encore, lack of skilled labor is, hampering efforts to increase production. And so this is just, I saw the same thing when I was in the renewable business. There's not enough people who know how to build substations and transmission lines. I turned off my LinkedIn and all this stuff, and I still get people calling me, wanting me to go back to work. I'm not going back to work. I'm too old. I don't want to do it. I don't need to. But this is the problem, because there's just not enough younger guys, skilled people. So it says, United States faces a shortage of skilled trade workers. Those in the skilled trade sector are on average older than the rest of the workforce, and fewer young people are entering the pipeline. To build, baby, build, as the White House exhorts, we'll need lots more construction workers. What's to be done? Policymakers have only three tools at their disposal. First, they can encourage many in the aging workforce to delay retirement. Good luck with that. Most of us made our money and got out. Second, they can fill the pipeline with more people learning the skilled trades, which is what they need to do. They need to expand trade schools, apprenticeships. they need to invite the unions in and have a discussion about apprenticeships and things of this and how the government can, help that out. Third, and probably most politically challenging, they can import skilled labor. Well, um, when you say that, I've worked around here in South Texas a lot, which you just because somebody has a hard hat on and a tool belt doesn't mean they're skilled. What you get is a lot of people. You get a foreman that's kind of skilled, has a lot of knowledge, tribal knowledge, we call it, and he's got a cousin from Guanajuato and some friends they brought up from Monterey, and they follow him around from company to company. And what's their real skill sets? Is it formal? They got a little bit of this and a little bit of that, and it's not, I would say, semi-skilled. And so we need to formalize this process of skilled trades, trade schools, apprenticeships, things of this nature, not just open the floodgates to cheap labor. That's a whole nother discussion I don't want to get into. But anyways, it goes on, it says the American economy will continue to need students to pursue both STEM and skilled trade jobs, each of which represents about 1/5 of the U.S. workforce. That's likely to be the case for a long time, and that's a good thing. No, I agree. And so this is a tremendous opportunity, I think. But again, when you have a 2 and 4 year election cycle and two political parties that are diametrically opposed, or not just the parties, but people in the country between left wing and center right, um, they have different views on things. I mean, you have one group of people that want to tear down all the institutions. Well, I'm not going to get into all this. It's just going to be difficult, I think, with all of the other contradictions that are out there. All right, guys, that's it for this week. Thank you for checking it out. Everything continues to grow. I mean, explosions in subscribership to the AIA newsletter have been tremendous. Since I've been working on this and taking it more seriously over the last couple months, I think it's really paid off. It's really going up. I hope that you're getting some value out of it, and I invite others to check it out. Links in the show notes below. You can get the free weekly email that I send out, and then the paid newsletter with actually has the ideas that in the model portfolios. All right, guys, that's it for this week. We'll talk to you next week.